Thanks. Good morning, everyone. So welcome this morning to the Virginia Agricultural BMP Cost Share Program training. This training is part of the initial DCR Conservation Planner Certification Program, one of the required courses. So if you would take a moment, put in your name and district in the chat. And certainly if there's more than one of you gathered around a computer, list everybody that's there. I want to try and capture everybody's attendance today. This morning, Sarah Bottenfield, who's the Agricultural Incentives Program Manager with DCR, will be leading our discussion. And as we go throughout the morning, try and keep your computer on mute. We will be taking questions through the chat and try and answer those as we go along, as well as there'll be some periods throughout the morning that we can stop and unmute as necessary to ask and have those discussions as well. So feel free to post whatever questions you have, and we will try and get to them either with Sarah or in the chat. So with that, I will hand it off to Sarah.
All right. Thank you, Carl. Good morning, everybody. I hope everybody's staying warm this morning. So as Carl said, I'm the Agricultural Incentives Program Manager for DCR. Before we get started, I had just a couple notes, things that I wanted to make you all aware of. One is that we have today, I think, more folks from our partners and I guess non-soil and water district affiliated folks, which we're happy to have you. I just wanted those folks to be aware this training is pretty specifically tailored to soil and water district staff and the work that they do with the BACS program, just so that you know what you're getting into. And I also wanted to make sure everybody is aware that the information I cover today is current for the current program year, so the program year 2026, fiscal year 2026 BACS program. We do have changes to the program typically each year. Some years those changes are more significant than others. We host update sessions every June for the Soil and Water District staff to go over what is changing for the new program year that starts July 1st. So just be aware the information we cover today is correct for the current program year. The vast majority of it will not change, but there are things that may be in this presentation that 6 months from now are different when we're in a new program year. Right. So what we're going to do today, I'm going to start with some history of the BACS program, spend a lot of our time on program guidelines and how districts work with those guidelines. I'll review some information about some of our most common BACS practices, touch very briefly on CREP there at the end, and we do have a short break built in about halfway through. So the BACS program, or the Virginia Agricultural Cost Share Program, is a partnership that is established in state code between soil and water conservation districts and DCR. And this partnership has three primary goals or aspects of the partnership. So one is provision of technical assistance to advance the adoption of conservation management, delivery of educational initiatives to both youth and adult groups to further their awareness of water quality issues and solutions, and the promotion of incentives to encourage voluntary actions by landowners to minimize non-point source pollution to state waters. The program officially began July 1st of 1984. It was limited to the Chesapeake Bay and the Chuan River. As we do today, it provided financial incentives to producers covering most of the state, about 2/3, and offered 6 BMPs. Within a few years, the VAX program had grown to cover the entire state, although there was variability in the financial incentives and eligibility. But similar to the structure of the program that we still have today, funds were distributed to soil and water districts based on how agriculture affects water quality in their area. There's a local board of directors that approves prioritization of applications, and the districts funded those applications that had the greatest likelihood of improving water quality. Over the years, there's been an increased emphasis on the Chesapeake Bay. Currently, we have a 70-30 split for funding between the Chesapeake Bay and the Southern Rivers portion of the state. Funding for VAX has gone up and down over the years. The long-term trend has been upward, and certainly within the last few years has been a steep upward trend. We've had multiple record years of funding, currently over $220 million in program year 2026. VAX is a water quality improvement program. Its intention and its goal is to reduce nutrient, sediment, and bacterial contamination of Virginia's waterways. VAX works on a field-by-field basis to achieve pollution reductions. So some of our partners, this is a difference between, for example, NRCS and other groups we might partner with that may look at the entire operation when they work with a farm. Some of those partners can also address other resource concerns beyond water quality. But just keep in mind, when you're working with those partners or working with producers and they're sort of comparing programs, VAX is often more limited in scope. The VAX program is funded by Virginia taxpayer dollars, and in order to be responsible with those dollars, our goal is to get the most bang for our buck, maximize nutrient and sediment reductions by implementing the most cost-effective BMPs that we can. And the way that we express this sort of in shorthand for the program is this phrase, least cost technically feasible. The funding for VAX, as I said, it's taxpayer dollars. By statute, 10% of any state surplus goes into the Water Quality Improvement Fund. We've had a number of years of significant surpluses, so there have been some large deposits to the WQIF. Once those funds are in the WQIF, there are some carve-outs for chunks of money to go to various special projects and other agencies, but the vast majority of WQIF funds get deposited into the Virginia Natural Resources Commitment Fund, or the VNRCF, and that is where VAX is funded from. We do have a portion of funds each year that goes into a WQIF reserve to try and offset years when there isn't a budget surplus. And starting in 2010, a $10 fee was added um, to each real estate sale transaction that also goes into the BNRCF and can go towards VAX funding. Once those funds are in the BNRCF, they are administered via annual grant agreements between each soil and water district and DCR. And these grant agreements specify the deliverables that the district agrees to accomplish in exchange for the funding that DCR is providing. If you are a newer district staff person, or even if you're not new, and you're not really familiar with that grant agreement, if you haven't seen it before, I would encourage you to talk to your district manager or administrative staff or whoever is the keeper of that sort of document and take a look at it. I think it's a good way to see a summary of what the district is expected to do in a given year. The funding that's allocated to each soil and water district is largely influenced by the non-point source assessment that DCR completes every 2 years as part of the Virginia Water Quality Assessment Report. And that every 2 years falls on even numbered years. So this is 2026. So there will be a new non-point source assessment coming out this year. We use the agricultural component of that assessment, which takes into account many different factors related to agriculture and how it impacts the landscape and water. So soil characteristics, slope, the conservation practices that are already known to have been installed in that area, stream flow, lots of different factors. And then using those data inputs, the pollutant loads for each hydrologic unit are estimated by modeling and then ranked as high, medium, or low priority. So the highest priority 20% of watersheds are designated as high priority. The medium 30% get a medium designation, and then the bottom 50% get a low designation. And then the funding distribution is reversed. So 50% of funding is directed to the high priority 20% of watersheds, 30% of funding to the medium, and 20% of funding to the low priority watersheds. And so the makeup of high, medium, and low priority acreage within the district area helps determine that funding distribution. So each year when the VAX manual is published, it includes this map of the state showing high, medium, and low watersheds. And as I said, this map would be updated every other year as that non-point source assessment is revised. So you can look at this map, you can look at these over time in past versions of the VAX manual and see how that assessment has changed. And you can see also where sort of our hotspots are more on the eastern side of the state where there's a lot of cropland that may have higher erosion potential, and then more into the Shenandoah Valley where there's a lot of animal agriculture and animal waste being generated. So we will have a new version of this map for program year 2027 that starts July 1, 2026. So once the district has their grant agreement in place and cost share has been allocated to them, they're going to start looking to get participants signed up for BMPs. Districts should be taking applications continuously from from folks who are interested. But there are some options for how the district can manage those applications and their administration of the program throughout the year. Some districts choose to hold an advertised sign-up period initially from the start of the program year, and then all the applications that come in during that period will be grouped together and ranked at the close of that sign-up period. Some districts just continuously have a rolling sign up where they take applications at any time throughout the year and then bring them to their board for approval as the applications come in and as funding allows. It's also possible to do a combination of the two with an initial sign up period, and then if funds are still available, continue taking applications throughout the rest of the year. We do ask that districts continue to take applications even if you have obligated all of your funding. It lets you have those applications kind of on hand in case there's a cancellation and you have funding that becomes freed up and you can move to another applicant. Having those applications on hand and having them entered in CAS also helps us at DCR identify where we need to direct more funding. So it's much easier for us to see when those applications have been put into CAS. We can run some reports and see what the unfunded demand is, so that if we have funds to reallocate or we have funds that we can shift around between districts, we can see where those can best be used. When you receive an application, you'll have to figure out as one of your first steps whether it is an eligible application or not. The A in BACS stands for agricultural. So we are an agricultural program, and the program defines what is considered ag land in order to be eligible for cost share. And that is land that's being used in a bona fide program of agricultural management and engaged in production of agricultural, horticultural, or forest products for market. It has to consist of a minimum of 5 contiguous acres with verifiable gross receipts in excess of $1,000 per year from the production or sale of those agricultural, horticultural, or forest products produced on the applicant's land for each of the past 3 years. Over the history of the program, some questions came up repeatedly about particularly horse operations and how those fit into our eligibility requirements, because often folks who have horses are keeping them for more of a recreational or just as pets, essentially, rather than as agricultural production. So we do have some additional clarification about eligibility for equine operations, which is that commercial equine operations such as breeding, boarding, and training facilities are eligible for funding if they meet that 5-acre, 3-year, $1,000 requirement. And districts are allowed to request financial records to show that proof of ag production if they feel like they need to. That could be something like having a Schedule F filed with the applicant's taxes. One important distinction that I want to make is that eligibility is tied to the land, the agricultural land, not to the participant. So if a new farmer gains a lease on land that is new to them but has been previously farmed, it is most likely going to be eligible for funding in terms of that production history. If you have a situation where somebody recently purchased land and you don't have history kind of easily accessible for that land, you can look for county land use records. You can check with your local FSA office to see if previous owners or previous operators um, submitted their production records to FSA and use that. You can also look to see if a previous owner participated in the VAX program in recent years. Land owned by municipalities or state or federal government agencies is not eligible to receive cost share or tax credit. Where you may have land that falls outside of your district boundaries, we have some guidance in the manual for how to deal with that and how to determine eligibility. At the state border, the field in question is only eligible if a portion of the field that's being treated or the practice would be applied lies within the Commonwealth. If the entire field is outside of the Virginia state boundary, that field is not eligible for VAX. The more common situation is land that crosses county borders, where those county borders are also district borders. In those cases, the district that has the largest amount of the field by acreage within their boundaries should administer the program. And you can use, there's a county boundary layer in CAS, Conservation Application Suite. You can use that county boundary layer to determine that acreage and which district should administer the program for that field. We also have created in the last couple of years a process for districts to mutually decide that they would like to allow sign up for certain practices across their boundaries. So typically this comes up in a situation where a participant, signs in farms in two different counties that are in two different soil and water districts, and as a convenience factor for the participant, if they were able to go to just one district to sign up their cover crop or maybe nutrient management practices, it would just add convenience for them. So those two neighboring districts may agree via board action to allow their neighboring district to sign up certain practices within their boundaries. And the list of practices is in the manual, and both district boards have to agree and have to take action for this to be allowed. And it is up to the district board. They're not required to come to this agreement. If there's not an agreement between the districts, then the practices have to be signed up with the district that serves that practice location based on the criteria on the previous slide. The important thing with these signups happening right along district boundaries is just to be communicating with your neighbors, your district neighbors. So when you're taking an application, this is done through our contract part 1. And we're going to look at that over the next few slides. But you'll need to ensure that all of the information on the part 1 is completed. So all of the participants' information. There's a section on the form that asks about whether cost share is going to be received from another soil and water district in the same program year. You need to make sure that the participant has signed and dated the form, that you have a W-9 form from the participant, and that the information they're providing on the contract part 1 matches what they have provided on the W-9. That's important for tax purposes. You need to strongly encourage them to read and make sure they understand all of the language, the information that's on the part 1. Give them a copy of it. And the part 1 has to be completed prior to initiating the BMP. Our VAX guidelines say that BMPs initiated prior to requesting cost share, and that's what the contract part one is. That is the participants' request for cost share are not eligible. So make sure to, when you have those kind of initial discussions with um, a prospective participant, um, please communicate to them that if they decide they would like to try and move forward with cost share, they need to sign up as a first step. They cannot come, sort of after the fact and say, hey, I did that thing we talked about. Now, how do I get some funding for it? There is a self-certification form, a standalone form that districts may use. It's optional, and it covers the same eligibility certification that the participant is also attesting to when they sign the part one. But if your district would like to use a separate form to kind of emphasize those eligibility requirements and the fact that the participant is taking on the burden of confirming that they meet them, there is that optional form you can use. The W-9 form that I mentioned is required. It can be printed out from the conservation application suite. And please try and make sure that your participants understand that cost share funding is considered to be income. So there are tax implications to receiving cost share, but the district should not try and give tax advice to any participants. If they have questions about, well, would it be better tax wise if I did this or that? Just encourage them to consult with their tax preparer or tax advisor. Don't put yourself in the position of telling them what to do on those issues. This is the first part of the contract, part one. So this is at the top, all of the participant information that needs to be filled out completely. And then I want to go over some of the language here that the participant is agreeing to or acknowledging when they sign this form, and things that you probably want to highlight to your applicants. So when they're requesting cost share, they are agreeing to install and maintain their practice according to the specifications for the lifespan of the practice. They agree to allow agency personnel access to their land to for the design and construction of the practice, and also to inspect that practice through the lifespan. They understand that the sale, lease, or changed use of the property does not exempt them from their maintenance requirements. They understand what the lifespan is, and that they understand that the reductions from their practice will be reported to DEQ for further reporting to the Chesapeake Bay program. So this slide has the bottom of page one and the top of page two for the contract part one. So this covers repayment of cost share if the practice is found to be not meeting standards or specifications during the lifespan, that they will be required to repay cost share. The applicant self-certification of eligibility. This is their certification that they meet those requirements for how agricultural land is defined for the program. And in the bottom of the self-certification, they also are saying, certifying that they're not contracted to receive cost share funding from any other source for the same practice on the same acres, unless multiple funding sources are being used to share the cost. So we would call that a piggyback practice where we're combining often state backs and federal funds for the same practice, but um, they can't double dip on funding otherwise. And then the final part of the contract part one um, informs them that there is a program cap on cost share per applicant and asks, they're the yes or no check boxes, whether they have or will receive cost share funding for another district during the current program year. That's just to help districts better track and be aware on the front end of whether this applicant might be coming up against the participant cap for the year. And then the last bit there is related to the tax credit program, how their tax credit will be calculated. They're eligible for a tax credit. And again, the part one has to be completed before a practice is initiated. Otherwise, they are not eligible for VAX funding. A few other notes on eligibility. DCR and the VAX program, we have a longstanding partnership with our federal partners, a USDA, through both the Farm Service Agency or FSA and Natural Resources Conservation Service, NRCS. So if a district is notified by USDA that an applicant is in violation of any Farm Bill conservation provision, we also consider them to be ineligible for VAX cost share funds. And I'm not going to go through all the bullets on this slide. It's just kind of spelling out what to do in this situation, depending on where the application is in the process. The thing I want to point out is this is something that districts are expected to be reactive to, in terms of, if you hear from USDA, if you find out from USDA that the applicant is in violation, then you need to act and consider them ineligible. Districts are not expected to be proactive in that they need to check with USDA on this status for all of their applicants. It is only when you receive that information that you need to take action. There are also some eligibility considerations for state environmental law compliance that determines whether folks are eligible or ineligible for VAX. In cases where there's a founded Agricultural Stewardship Act complaint, the Ag Stewardship Act, or ASA, is administered through VDACS, the Department of Ag and Consumer Services. Participants are eligible for VAX funding if they have received a founded ASA complaint and they are implementing an ASA plan to correct the problem. So they're voluntarily acting to implement their plan. They are also eligible if there's a possible violation of state environmental law or regulation. So if that violation or possible violation has been identified and the participant is working with DEQ to come into compliance, or if they just on their own have realized that there's a problem that needs to be addressed, and they're doing that voluntarily, they are eligible. If a founded ASA complaint has gotten to the point of the Commissioner of Agriculture issuing a corrective order because the applicant has not implemented an approved ASA plan, at that point they have become ineligible for VAX funding. Similarly, if the applicant has received an enforcement order from DEQ, they are not eligible at that point to request cost share. If they made the request prior to the start of the enforcement action, their application can continue to go forward. But if they are requesting it at the time, at some time after that enforcement order has been made, um, they are not eligible. So continuing to talk about eligibility and how districts need to evaluate eligibility for an application. Um, we have for the program what we call priority considerations, and these apply to the entire program, to all districts statewide. And if an application doesn't meet at least one of these priority considerations, it should not be approved for funding. I won't read those out to you, but they are in your manual. Um, we do have quite a few exceptions to those priority considerations for what are designated priority practices. And those priority practices are prioritized for funding regardless of where they're located. So meaning even if they're in a lower priority watershed, they still are considered high priority. And that includes animal waste practices, practices that protect groundwater, prevent gully erosion, or critical areas. So again, there's a list in the manual of those priority practices. We also have what we call secondary considerations. So these are developed and used by each individual soil and water district to prioritize the applications that address their locally identified water quality concerns. Secondary considerations should consist of a set of written narrative statements, ideally with a ranking worksheet to go along with them that can assign some numerical value to the criteria in those narrative statements, so that applications can easily be ranked against each other. I think as the last few years, our funding has increased to the point that for many districts, they have enough funding now. They can approve basically all of the applications they receive that are eligible. And so ranking applications has in some cases become less important. But should you be in that situation, you need to be able to explain how you have used your secondary considerations to rank the applications that you've received. Secondary considerations cannot identify specific practices to be prioritized. They need to express what the water quality concern is that the practice would be addressing that is at the high priority. The local district board has to approve their secondary considerations each year. They also come to DCR for approval as well. And secondary considerations have to be fully approved and in place before any cost share approval can take place at the district for the year. And they cannot be changed during the year. Once they're approved and set, those are the secondary considerations the district will be working with for the year. There are some examples of secondary considerations included in the manual if you want to get some ideas or see how your district's secondary considerations compare. I would caution against trying to have too many secondary considerations, so that you can be clear about how they were applied, should you need to give that explanation. One thing I'll mention, again, I think later in the presentation is the conservation efficiency factor. And this is a score that is calculated for each practice. It's calculated automatically in the conservation application suite. It brings together 11 different components that are differently weighted That includes things like cost effectiveness for the practice, and it generates a score. Um, so this is something that you can use to compare. It's most effective for comparing like practices. So comparing a stream exclusion practice to another stream exclusion practice, things like that. Um, it can also be used as part of your secondary considerations and within your ranking worksheet um, as a factor to rank practices that are dissimilar from each other. And the way that the KEF works is a lower KEF score means that it has a greater conservation efficiency. So a low score is better for KEF. In addition to their secondary considerations each year, districts also have to develop an average cost list for their district. Um, this is a list of the BMP components that are used or necessary in that district. It has to be approved by the district board. Cost list has to be approved by the district board prior to the approval of any cost share um, for that year. And the average cost list is what is going to provide the basis for your cost estimates for practices. Um, the average cost lists have to be approved by your district board and they have to be submitted to DCR. But unlike the secondary considerations, DCR does not approve average cost lists. We just need to have them on file. Districts can use the NRCS average cost list either as is, or they can make modifications to it to make it more locally applicable. Just be aware that NRCS operates on the federal fiscal year. So their updated average cost list is typically coming out several months into the state program year. Um, Depending on the types of practices that your district typically is installing, you can choose to use a more abbreviated average cost list for just your commonly used practices. But you need to have a contingency plan as part of your cost list for how you'll handle any costs for components that you do not have on your list. And that can be a statement at the bottom of your cost list that says the district will use the NRCS list for any unlisted components. I really encourage districts, especially those that do a lot of more structural practices where they're going to be paying cost share on a percentage basis, to spend the time to develop a thorough and accurate average cost list, looking at cost information that you've received from your participants over the past year as they've turned in their documentation for completed practices. Call around to some vendors if you can, get them to give you maybe materials costs or things like that. It really will benefit you and your producers to have an accurate cost list. Once the district has set their average cost list for the program year, it is not allowed to be changed except in very unusual circumstances due to market-based cost increases, specifically increases in the cost of materials. It's not applicable to increased labor cost. So that process is outlined in the manual. It requires both the district board and DCR approval. And just to kind of give you an idea of what that is trying to address, this process was added during COVID or following COVID, when there were lots of kept hearing the phrase supply chain issues, and materials costs really kind of skyrocketed so quickly. That's the kind of situation that this process is intended to address. So I'm going to pause right here and see if we've had any questions come in. All right, don't see anything, so I'll keep rolling. For each cost share practice in our VAX manual, there is a cost share rate established in the specification. These rates fall into three different categories or types. We have percentage-based rates. For example, what you'll find in the WP4 suite of practices for animal waste. So these are paid at, for example, 75% cost share rate. We have practices that are paid on a flat rate per acre or per instance. For example, cover crop practices that receive just a flat per acre payment rate. And then we have some practices that receive a combination, so that there is a percentage-based payment in combination with a flat rate per acre, typically, payment. So for example, the SL1 is the long-term, establishing long-term cover on cropland. That includes a 75% cost share rate for the eligible component costs, plus a flat rate incentive payment per acre that varies based upon the lifespan. So choosing a longer lifespan results in a higher per acre flat rate incentive payment. For practices that are paid on a percentage basis, VAX funds can be combined, or what we call piggybacked, with federal sources of funding, such as EQIP through NRCS or 319 grant funding. And the district board can choose to combine VAX with those other funding sources to pay up to 100% of the approved estimated cost or the eligible actual cost, whichever is less, as allowed in the VAX guidelines. In those cases where the funding sources are being combined to go up to 100% cost share, the VAX funding by itself still may not exceed the cost share rate that is listed in the BMP specification. So I mentioned that our WP4 suite of practices have a 75% cost share rate. If that practice is being funded in combination with EQIP, and EQIP is paying, let's say, 30% towards the practice, VAX can pay 70% and bring that to 100% of the estimated cost. If EQIP was only paying 20% of the cost share or of the cost, the VAX payment still cannot exceed the 75% rate from the VAX specification. So the maximum that participant could receive would be a 95% cost share. So combining funding sources in that way towards a percentage-based practice payment is allowed. Double dipping, which I mentioned in talking about the part one, is not allowed. And so that comes up typically with practices that are receiving a flat rate payment. If VAX is providing a payment for, say, a cover crop practice, the participant cannot also be receiving a cover crop payment on that same acre from another source. We would consider that to be double dipping. For practices where the cost share rate is a percentage, paid on a percentage basis, participants may choose to complete their own work, and that is an eligible expense. The participant just needs to provide documentation of their labor hours and how they're valuing those hours, and whatever expenses they incurred to purchase materials, or for any work that they didn't do themselves and they had some other service provider come in and provide some work on the project. Um, districts districts should have a plan to address these self-billing situations on their average cost list, um, to make sure that the um, the value being claimed by participants is not either intentionally or unintentionally um, gouging or excess. And in those cases where the participant is doing their own work, they can claim their time, any materials, using their own equipment, if they have to pay a shipping fee, all of those expenses are eligible. They just have to be documented. The BEX program has a cap on the amount of cost share that any one participant can receive per program year or per fiscal year. Currently, that cap is $300,000 per year. It has been increased over the years. I think when I started working with the program, it was either 50,000 or 70,000. So it has increased pretty significantly over the years. We have a handful of practices that are exempt from the cap, so they do not count towards a participant's cap for the year. There's our resource management plan practices, the whole farm approach, as well as this funding from the small herd initiative, um, do not factor into the cap. Districts have the ability to set a lower participant cap if they wish. Some districts that have historically received lower allocations have done this as a way to try and spread the wealth a little bit amongst their participants. If a district sets a lower cap, that applies to all of their applicants district-wide for the entire program year. It it has to apply to everyone. And of course, they can only go lower with that district cap. The district cannot go higher than the statewide cap. And we do have an option in some cases to make an exception to that cap through what we call a variance. The variance process was put in place several years ago in recognition of the fact that occasionally there are practices that are so large and so expensive, to address the resource concern, that even if the participant receives the maximum amount of cost share, the amount they would have to pay out of pocket is so large they can't afford to do the practice. So to request a variance, first of all, the district has to have the funding available in their budget. So this is not a separate source of funding. It's using the allocation that the district has already gotten to fund the practice. The variance request has to be acted on by the district board to move the request forward to DCR. So that's separate from approving the cost share. The district board will take action to submit the request for a variance to DCR, and that's all they're doing at that point. Eligible practices for a variance are primarily structural practices, animal waste, stream exclusion, or combinations of those practices. And we did introduce a year or two ago the ability to do what we call a bundle variance when a participant is already eligible to request a variance for, let's say, an animal waste practice, and they have other practices that they intend to do or would like to do in the same program year. So let's say they also would like to sign up for cover crop. We allow their cover crop request can come in as part of their variance request when they already are requesting a variance for their animal waste practice. So bundling everything together with that eligible variance request. Variance requests come to me, and I then will convene what we call the variance committee. That's me, the CDC, Conservation District Coordinator for the district that is making the request, and one of our ag BMP engineers, Amanda Pennington or Benchester. The process to request a variance is outlined in the manual. There's a list of the documentation that needs to be submitted. And if you have not been in a situation to need a variance but find yourself there and need some help, just reach out. The variance committee has 45 business days to respond to the board, to the request after it's received. I don't think have ever taken 45 business days to respond to a request, but do keep that in mind if you're coming up to, near the end of a program year and you want to request a variance. Just keep that timeline in mind as to how long it could potentially take to get a response back on that request, which your board will then need time to take action on as well to approve any cost share. The variance committee may ask for additional documentation or even to do a field visit as part of their review. And then the district board can only approve the practice for cost share after the variance has been approved by DCR. So once you have taken your application from a participant, part of processing that application is to enter it into the Conservation Application Suite or CAS. District staff will input various measures depending on the type of practice, and they will map the BMP, which again, exactly what that mapping consists of depends on the type of practice. It may be field boundaries, it may be just dropping a point, it may be digitizing components, but those inputs will allow CAS to generate the KEF score that can be used for ranking applications. And it also allows for a resource review query to be completed. An estimated practice cost is entered for each application. And so that is going to be generated from your district's average cost list and the components that make up the practice. For practices that have a percentage-based cost share rate, that estimated cost is going to be the basis for calculating the amount of cost share and or tax credit that's going to be requested for approval. A conservation plan, if necessary, and or nutrient management plan also needs to be written. Conservation plans are written in CAS. I'll talk about nutrient management plans a little bit later in the presentation. So I just mentioned resource reviews. These are required to be done for any practices that have ground disturbing components. And this is a part of the conservation planning process to look at the potential impacts of a BMP that's being planned as far as how it might impact other resources of the Commonwealth, for example, threatened and endangered species. So it's important that this review process take place before the practice is approved and certainly before it's initiated, in case there needs to be some sort of mitigation, either a time of year restriction, possibly relocating components, um, or something like that. So CAS is set up to automatically run this query for any resource hits, um, but it depends on all the BMP components being digitized. So that review that is run in CAS is running off of the location where you, as the district staff, have digitized your practice components. In order for it to be a complete and accurate review, that digitizing of components also needs to be complete and accurate. If you have any hits when that query is run, the district has to follow up with the appropriate agency, and that's all listed in the report that is generated from CAS. Those agencies have 30 days to respond, and you need to keep any documentation of that review process and any follow-up that was done in the file for that practice. Carl Theoboyne, who did the introduction to this training, is our lead on resource review issues. And there is a whole separate training that is part of the conservation planner certification. Typically that's held in the fall in October. So if you have specific questions about resource reviews, you can reach out to Carl. And these are some of our partner agencies that are involved with those resource reviews for archaeological sites and what we call cultural resources or historic resources, endangered species, and then TMDL implementation areas. So at this point, we're ready to talk about getting the practice approved. I mentioned earlier ranking, and that in many cases now is not necessary for districts with the amount of funding that they may have currently, but it's important for you to know that that is a factor and a requirement, you know, should we come into a time of more limited funding. The conservation plan and the application are brought before the board for approval. The conservation plan has to be complete and it has to be approved before any cost share funding is approved. The contract part 2, which we're going to look at over the next couple slides, and the conservation plan have to be signed and dated by a board member, and the contract approval date, the conservation plan approval date, and the required completion date for the practice have to be entered in CAS. So the part 2 is the part of our VAX contract that officially documents approval of cost share. So this will show the details of the instances that are being approved. It is signed by district staff there for the statement of technical need. There's a checkbox to check that the request has been approved or not approved with a director's signature and date. And then on the second page, there's space at the top for carryover signatures, which we'll talk about carryovers here in a little bit. And within the last couple of years, we also have added the requirement for the applicant to sign the part 2. And so this is, that was something that was flagged by the Attorney General's office as necessary to have the participant's signature at this point in the contract for them to acknowledge that if they deviate from the project that has been planned and approved, that may result in their cost share being decreased or potentially denial of future cost share program participation. Um, so we have not established a deadline for applicant signatures on the part two, but they need to happen in a timely fashion following approval so that the applicant's acknowledgement of that information is happening before they move further in the implementation process. It's happening at a point that that makes sense. And once cost share or tax credit has been approved, the district is required to notify the participant of their approval in writing. And at a minimum, that written correspondence needs to include the amount of cost share that's been approved and a deadline for completion of the practice. We have this letter as a template that can be generated from CAS. Depending on the type of practice, there probably are a lot of other documents or other information that you are going to want to provide to your participant when they have been approved. Practice specifications. Some districts have developed checklists or other sort of information sheets that they provide to participants, but the minimum is to inform them of the approval amount and the deadline for completion. For practices where the cost of any one component is estimated to exceed $50,000, the participant is required to obtain bids. And a copy of, there's a different version of the approval letter for approval pending bids, as well as a bid solicitation sheet that need to be maintained in the file. So we're going to look at the bid solicitation sheet. This is in the VAX manual, and it has the applicant's name and information at the top, and then it has three options for you to check one of the three. The first option is that the bid process is not required. Stop here. So you don't need to do anything else. That's if there are no components estimated at over $50,000. There's also an option to check here if the applicant will complete the work on his or her own. Bid solicitation is not required. Stop here. So we talked earlier about participants doing work on their own. So even if the estimated cost of the component is over $50,000, if the participant is going to install it themselves, they do not have to get bids. And then the third option is that the applicant is not going to complete the work on their own, so they are required to solicit bids for each applicable component. And so this bid solicitation sheet will be completed with information from the different vendors or contractors. This is on the second page, the list of which components, if there are more than one, require bids and what the bid was from each vendor. So you'll see at the bottom, when this form gets completed, the participant is asked to identify which vendor they're going to go with. They are not required to select the lowest bid. They just need to provide their reasoning if the lowest bid is not selected. So that may be the lowest bid had a year-long waiting list, so I'm taking the second lowest bid and they can start within 6 months. That's fine. They may also not have been able to obtain the minimum of 3 bids. And if that's the case, they need to provide the reason why they weren't able to obtain 3 bids. So it might be, I reached out to 7 different service providers and I only heard back from 2 of them. And then any other comments, the applicant signs the bid sheet and dates it. There is a list in the manual of the practices where the bid solicitation process is applicable. It also explains how to determine what constitutes a component for the purpose of that $50,000 threshold. And there is a I mentioned there's a version of the approval letter. There's also an approval status in CAS for practices that require bids, that they are conditionally approved pending bids, and that conditional approval letter. The bid sheet should be completed by the participant and returned to the district within 120 days. I already talked about if 3 bids can't be obtained or not, they're not taking the lowest bid. And then once that completed bid sheet is received, then the practice can be marked as approved and receive their final approval letter. We do have a process or an allowance in the guidelines for approving additional cost share for a practice that has already been approved. And that is based on unforeseen circumstances that warrant a change in the design or the construction or require additional materials expenses related to that unforeseen circumstance. So an example here on the slide is a dry well. So there's a practice that is planned. It includes drilling a well. When they go to do that, they drill a dry hole. So they have to try again. That's an unforeseen circumstance. So the district can approve additional cost share funds to cover that expense. And there could be other expenses associated with that. Maybe now are going to need more pipeline because of the new well location. The other thing that comes up, I would say most frequently with the unforeseen circumstances is rock and the district planned pipeline or even fence at their standard cost from their cost list, and the site turns out to have a lot of rock. So they need to go back and bump up that that estimated cost to their cost for sites with rock, a higher cost. That would be allowed as an unforeseen circumstance. Any approval for additional cost share has to come from the same program year as the contract. So if a contract is approved in one program year and a little slow to get started, or maybe they have difficulty getting contractors to the site or something like that, the ability to approve any additional cost share for these unforeseen circumstances is going to be limited. They're going to have to depend on maybe other practices from that program year that are being completed and coming in under budget or being canceled or something like that to free up funds in that past program year. All right, I'm going to talk about carryover, which is how much time we allow for particular practices to be completed. I mentioned earlier inputting a required completion date into the approval letter and into CAS. So this carryover concept helps you determine what that completion date needs to be. So for carryover, VAX practices fall into one of 3 categories. We have practices with a 1 program year completion date that are eligible for carryover, practices with 2 program year completion dates that are eligible for carryover, and then everything else, which are practices that are not eligible for carryover. They have to be completed within the same program year that they are approved. So carryover means the practice is not being completed in the same program year that it is signed up and approved. So this table, these are found in the VAX manual. We have a table that lists practices with one program year completion dates that are eligible for carryover. And so what this means is that the initial expectation for these practices is that they finish within the same cost share year that they are approved, but the district board can approve carrying them over to the following year if necessary. So prior to the end of the program year 26 year, on June 30th, the district will look at all of their BMPs, and for those on the one program year complete list, the board can take formal action to extend their completion date by 1 year until the end of program year 27, June 30th, 2027. So those will be put in a carryover status in CAS. And then if any of them are not complete by the end of that second program year, they'll be canceled. That's the maximum amount of time they're allowed. The list of practices with two program year completion dates is longer, as you can see. This covers practices that are typically larger or more complex. Most of our structural practices, just things that we expect to take longer to implement. So for these practices, they should always be given a minimum of 2 program years for completion. So their completion date will automatically be June 30th of the second program year after they are approved. They do still need, even though formal board action is not required to carry them over into that second program year, they do still need to be put in that status, the carryover status in CAS. So their initial completion date, if they are being approved in program year 26, will be the end of program year 27. At the end of that second program year, if the practice is under construction, substantially under construction, the district board can take action to extend their completion date for 1 more year. So give them a third program year. They have to be under construction, substantially under construction, for the board to approve that carryover. If you're getting to the end of a second program year and the practice really hasn't even been started yet, it needs to be canceled. It's much easier, less painful for everybody to cancel at that point than to have somebody really pushed up against a hard deadline at some point in the future when you've kind of seen that they're struggling to get things going. The district, at the district board level, the district only has the ability to approve that carryover to that third program year for these practices. If you get to the end of that third program year, they still are not complete, and any additional carryover to a fourth program year has to be requested. Approval for that has to be requested from DCR and will be considered on a case-by-case basis. So those requests are due to me by May 15th each year, and I do send out some reminders in the spring for districts to start looking and considering if they have anybody who is going to fall into that category. And at that point, that fourth program year is their final chance. If they can't get it done at that point, they can't be granted any further extension. So there's a few slides here kind of walking through an example. I'm not going to read through that, but you all will have the slides after this presentation if you want to look through that and go over the details. For carryovers, districts will work with their CDC to run reports and identify their carryover needs. Um, like I said, any requests that need DCR approval have to come to me by May 15th. And we will see emails from me with that reminder a little bit later in the spring. Any practice that's being approved for carryover needs to have a justification entered in CAS. The district can choose up to 3 options for why the carryover is needed. There's a drop-down menu. Um, if the carryover request has to come to DCR for approval, you have to choose other and then give a description in the comments section on the general tab of that instance as to why the carryover is needed. And so that is what this looks like in CAS. And you can see there's various issues there that are causes for practice delays, participants having family or health issues. They were approved late in the spring in their first program year. They have a seasonal restriction, things like that. And this should be, if the practice is being approved multiple times for carryover, it should be updated for each of those carryovers each time it's approved. We do make exceptions to our normal carryover rules for partnership projects where another agency and their timeline is involved. But districts should still reach out to those participants and encourage them to be getting completed. When a practice is complete, both the participant and the district must certify that it is complete and meets all the standards and specifications. So the district will enter the technical certification date in CAS, and that is the date that the district verifies that all of those requirements, standards, and specs are met. There is also a signature on the contract part 3, which we'll look at here in a couple slides, from the district and the participant as well, where both parties are certifying from their side that the practice meets those standards and specs. And then when you are calculating a payment for practices that pay cost share on a percentage basis, remember the payment is calculated on the approved estimated cost or the actual eligible cost, whichever is less. The cost share payment can only be made to the entity that signed up on the Part 1 for cost share. We do have the ability for the NM1A nutrient management plan writing practice and maybe a couple other circumstances where we allow an assignment of payment, but for the vast majority of cases, you are going to be issuing payment to the person or the entity who is on the Part 1. We do not have the ability to split payments between participants, whether that's business partners, spouses. The payment can only be made to the single person or entity on the Part 1. Any two-party checks, co-payee checks are limited to lending institutions. And I mentioned earlier the tax implications for cost share. Any entity that receives a cost share payment of $600 or more will receive a 1099. The districts issue those 1099s following the end of the calendar year. So the part three, this is the final part of the cost share contract, and it includes all the details about the completed practice, the payment, and the tax credit, all documented on the first page here, as well as the district staff signing the technical certification. And that says, I certify that all administrative and technical components of the practice have been completed by an appropriately qualified individual, and that each practice meets all applicable standards and specifications necessary for certification, payment, and/or tax credit. On the second page, we have the participant signature and a district director signature as well. So the participant's certification is saying that they have received and complied with all the program specifications, that they agree to maintain the practice as installed for the lifespan. It talks about, again, some of the same information from the part one about agree to refund all or part of their cost share if their practice is found not to meet specifications, and that they understand the practice is subject to verification checks, that they understand that the sale, lease, or changed use of the property does not exempt them from those requirements. And there is a list there, that bulleted list of the documents that, as applicable to the practice, that participant is saying that they have received. So obviously, you need to make sure on the district side that you have provided those documents. And again, it'll depend on the type of practice, but they should have the VAX program specification for the practice, NRCS construction specifications and standards, including operation and maintenance requirements, their site-specific engineering designs and as-built. And then this is the cost share contract is complete once all of the signatures are obtained on the part three. So I've mentioned several times, I've mentioned practice lifespans. Every practice has a lifespan, which is the amount of time that the participant is required to maintain it. Some of our practices are just 1 year practices or annual practices. The producer can sign up for them every year. But for others, the participant is committing to maintain the practice for longer, 5, 10, or even 15 years. The lifespan begins on January 1st of the year following the BMP installation. So that's something that is, potentially important for your participants to know, depending on what time of year they finish their practice. Somebody who is finishing a practice today, and they're being technically certified today or tomorrow and getting their payment, the lifespan for that practice isn't going to start until, we're not going to start measuring it until January 1st of 2027. I've also mentioned that changes in the control of land, such as land being sold or somebody losing the lease, it does not exempt the participant from the maintenance requirements. Just having sold the practice is not, for the VAX program, does not change anything about that individual or that entity's obligations. So if the person signing up for the BMP, who wants to sign up for the BMP, is not the landowner, I would really try and encourage them to either establish a long-term, written lease, or try and encourage the landowner to sign up for the BMP rather than the person who's leasing the land, to try and avoid issues with the loss of control of the property. We do have a process available to transfer responsibility. It can be done for BMPs that are completed as well as BMPs that are still under construction. Um, both participants and the district board have to sign. I'm sorry, both participants have to sign the agreement, and the district board has to approve it. If there is a situation with, a new property owner or some other loss of control of the land, um, it is voluntary for that new property owner to to sign that transfer agreement. They're not required to. Um, so, particularly in case of a sale, I would encourage the original participant selling their land to make that transfer agreement a condition of the sale. In a case where the original participant has passed away, the district board does have the ability to waive the maintenance requirement for the practice. In order to make sure that practices are being maintained as required, we do what we call verifications. And these are just inspections of BMPs during their lifespan to make sure that they are still functional and being maintained. Um, Districts primarily do these in conjunction with their CDC, their Conservation District Coordinator. We do a random selection of practices for verification, as well as practices that are nearing the end of their lifespan. We try to complete a verification, ask districts to complete a verification near the end of the lifespan because of the um, the way we can be credited for those practices in the Chesapeake Bay model based on the most recent date that they were verified. It gives us some additional years of credit for those practices, even once they come out of their BAC's lifespan. Um, Districts or DCR can add additional verifications at any time during the year if for some reason feel like it's needed. And I really strongly encourage you to reach out to your participants before you go out to conduct a verification. Um, just as a courtesy, they have given us permission by signing the cost share contract. They have given us permission to access the property. But it's good for the relationship to try and let them know when you're going to be coming. If you find that a practice has been damaged or destroyed during its lifespan, whether that's through a verification or just by you're driving around and you see something that's not right, um, that damaged or destroyed practice is, as I said, the responsibility of the participant. So to follow up on those issues, the district needs to first verbally contact the participant, notify them of the deficiency, and make sure that that is documented in your file notes. And within 2 weeks of that, discovering the deficiency and providing that verbal notice, the district needs to provide written notice as well via certified mail, and that will put in writing the nature of the deficiency, the time that the participant is allowed to bring their contract back into compliance, and will explain that repayment will be required if it's not repaired or brought back into compliance. The district can provide up to 6 months grace period to bring a practice back into compliance. I would encourage you to provide a grace period that matches the amount of work that is needed. If it's something relatively small, 6 months probably isn't necessary, and you'll kind of keep the follow up moving more quickly on that. But at the end of the grace period, the practice has to be re-inspected If it hasn't been corrected, then at that point, the district will again provide a written notice to the participant that repayment of funds is required within 60 days. If that repayment is not received and the deficiencies still haven't been corrected at the end of that 60 days, the district at that point will reach out to the Attorney General's office and turn it over to them for assistance in reclaiming those funds. Any tax credit on the practice has to be returned to Department of Taxation. In the tax credit section of the manual, there is contact information for Department of Taxation to follow up on the tax credit side of those damaged or destroyed practices. And I want to emphasize it's always important for all of your practices, all of your files to have things fully documented. But especially if you're to end up in a situation like this where something has to go to the Attorney General's office, having that documentation is just, I mean, you really will will thank yourself for doing that. When a participant is required to repay cost share, we use a formula that's outlined in the manual to calculate the amount of cost share that they owe. So I'm not going to go through this in detail, but basically, if the participant has completed half the lifespan of the practice at the time that it was damaged or destroyed, they would have to repay half the cost share. Occasionally, a practice may fail through no fault of the participant due to an extreme act of nature. So um, I encourage you to look at this process in the manual because there are a number of steps and details. But a participant whose practice is damaged by an extreme act of nature does have the ability to request one-time additional cost share to fix the practice and bring it back into compliance. If they do that, it does reset the lifespan for their BMP with a new technical certification date once that repair is completed. Those EAN cost share requests have to come to me to be approved, and then the district board can approve cost share. For cover crop extreme acts of nature, there is a separate process also outlined in the manual. So I just encourage you to take a look at that, familiarize yourself. There may be situations occasionally where a participant is required to repay cost share, and due to some excuse me, due to some highly unusual circumstance, hardship, they request forgiveness of that repayment, that claim that they're not able to make that repayment. So this is things like a life-threatening illness, a bankruptcy, some other really kind of extreme or highly unusual situation. So initially, this sort of hardship request would come to the district board, and if the district board agrees that this is indeed an applicable hardship situation, the district can then forward that to DCR, that request for forgiveness to DCR with any solutions that they have at the district level, suggestions for how to resolve the issue. And then when those requests come in to me, I will convene a 3-person committee to review that request and consider whether to grant that hardship forgiveness. So just remember, the district board does not have the authority on their own to forgive repayment in a hardship situation. It has to come to DCR. Just some notes on maintaining your practice files. There have been several things I've mentioned, and I've referenced keeping a copy of this in your file, um, keeping correspondence documented. There is a list in the manual of the, say it's a list of minimum documentation that district files are expected to contain. But any written correspondence and detailed notes of verbal correspondence, whether it's a telephone call or on a site visit that you've had with the participant, should be kept. Um, Certainly, your contract part 1, 2, and 3 forms with all signatures complete. A detailed location map of where the practice is installed. Any designs, job sheets, as-built, related, engineering documentation, any sort of plans or worksheets. That could be a sizing worksheet, a calculation worksheet, plan maps, any agreements that the participant has signed, your calculations of your estimated cost and your approved cost share, any payment calculations should all be maintained. A copy of the W-9, of the cost share check, the tax credit certificate, and copies of all of the receipts and bills for all the components, if it was a percentage-based cost share payment, that the participant had to turn those in. Your conservation district coordinator will do annual administrative reviews of district cost share files. So these will be randomly selected by the CDC, and then with some subset of those also selected for field verification. And this is a review of the case files to make sure that they're being maintained in a complete state with all the required documentation. The cost share file administrative review form that your CDC will use when they conduct these reviews is in the VAX manual, in the glossary. So you can look at that and you can know, that can even serve as sort of a file checklist for the district as to what is the minimum documentation that we need to be maintaining. So at this point, I don't see any questions in the chat, and I have us scheduled for a short break. Let's see, I said 5 minutes. It's 10:43. I think we'll do a 7-minute break. We'll come back at 10:50. So if you have a question and you just haven't put it in the chat yet, we'll take a look at those before I start up with my presentation again. And be back at 10:50, 7 minutes. Okay, it's 10:50, and I have had a cough drop, so hopefully my voice will last for the rest of this presentation. So I'm gonna get started again with talking about tax credit. I've mentioned tax credit a couple times. There is a 2-tiered system for Ag BMP tax credits. A 50% tax credit is available up to a $50,000 cap per individual or entity for Ag BMPs implemented on acreage included in a district-approved resource management plan, and a 25% tax credit up to a $25,000 cap for BMPs implemented on acres that don't qualify for that enhanced RMP tax credit. One important thing to note about tax credits, and particularly the RMP um, tax credit, is that if the participant receives VAX funding for the practice, they can only claim the standard tax credit. They cannot claim the enhanced RMP tax credit. Um, no, no individual or entity is allowed to receive more than $75,000 in tax credits, meaning they would have maxed out both um, both types. And if the amount of the credit exceeds the taxpayer's liability in the tax year, then this is a refundable tax credit. Both the RMP and the standard tax credit are based on the participant's true out-of-pocket costs after receiving cost share. Um, that should just say the standard tax credit, because if they receive cost share, they're not eligible for the RMP tax credit. So standard tax credit is based on the participant's true out-of-pocket costs after receiving cost share. And so for the purposes of calculating tax credit, cost share is going to include both the traditional kind of percentage based or flat rate cost share, as well as any additional incentive payments, such as a buffer payment or another incentive. So that means that receipts are extremely important to document the participant's actual expenses and their actual out-of-pocket costs for that tax credit calculation. Tax credits are approved by the district board, and then the district provides some information and documents to the participant that they need to claim their credit. And the district needs to provide those by the end of January. The ABM form, that's a Department of Taxation form that can be printed from CAS, auto-filled with the participant information. The district provides a letter confirming that the participant has an approved soil conservation plan or resource management plan. And the district also provides the tax credit certificate and cover letters that are generated from CAS. There is also an equipment tax credit. It is equal to 25% of all expenditures for no-till or precision ag equipment, as outlined in the manual. It is capped at $17,500 per individual or entity per year. And it is the purchaser's responsibility. It is not the district's responsibility to determine whether their equipment qualifies. But there is a list in the tax credit section of the manual. There is a list of eligible equipment. For the equipment tax credit, by the time that the participant is filing their taxes, they must have a district board approved conservation plan and be implementing a nutrient management plan. There is also in the manual a little form, a certification of nutrient management implementation, that they can use with their nutrient management planner to document that nutrient management plan implementation. I would just say this is a very brief overview of tax credits. There's a lot of other kind of forms and details. I did a training, I think 2 years ago now, on tax credits. And I believe that recording is still available on the forms page in CAS if you want to dig a little deeper into tax credits. Again, still talking about the equipment tax credit. The district will provide, upon request to the participant, a blank copy of the AEC form. That's the equipment tax credit form. It can be printed from CAS. A letter confirming that the participant has an approved conservation plan, and a blank copy of that little form or statement just they can use to certify their nutrient management plan implementation. Um, just briefly, I wanted to mention we do have the ability to voluntarily report practices, um, things that farmers have done without receiving any cost share funding. Um, and these practices, there's a section of the manual for voluntary practices, and those can be entered in CAS using the voluntary practice codes. So I'm going to talk a little bit about engineering and DCR engineering job approval authority. This will be covered in more detail by DCR engineering services staff at their various trainings, and typically they talk about some of this at the June program updates as well. So I'm keeping this brief, but I want to introduce it. Engineering job approval authority is a way for district staff to do some of the engineering work that is required for various practice components under the oversight of DCR's engineers. DCR has two PEs on staff, Amanda Pennington and Ben Chester, and they will issue EJAA to district staff based on the district staff's training and experience, and most importantly, their demonstrated competency with the component in question. There is a table in the manual that will show you which practices require EJAA or that if they require a PE, and then within those practices, which components of the practice is it required for. Most of our structural practices require at least some level of EJAA. EJAA is issued by DCR, by the DCR engineers for those components, so on a component basis. And that EJAA falls into three categories. The first is I&E, or investigation and evaluation. And this is kind of the initial assessment of the site, determining what the resource concern is and what the best option would be to address it, or options for the landowner to choose from. The second category is design. So designing and checking all aspects of supporting data, drawings, and specifications to ensure that the planned practice will meet the purpose. And then finally, construction, which is surveys, layout, staking, inspection of materials and work, making tests to determine that the job meets specifications. So developing or earning EJAA requires typically that you are working under or working closely with somebody who has EJAA to learn and practice those skills. The whole EJAA program and the process of being granted EJAA is quite strict because it's based on the engineering license of either Amanda or Ben. So when they grant EJAA to district staff, they are effectively extending their engineering license to them. So that's their professional certification qualification that they're kind of putting on the line for the person who they're granting EJAA to. When you have a practice that requires engineering, whether it's EJAA or PE, like I said, there is that list in the manual of which BMPs that applies to, and then which components within that BMP. There are a few options. Some BMPs require a professional engineer to be involved and to uh, sign and seal the design. So animal waste structures, um, stream bank or shoreline projects. Um, I already talked about district staff can earn engineering job approval authority. Um, district staff can assist each other if you have EJAA and one of your coworkers doesn't. You can assist them and under your EJAA. But if district staff don't have the EJAA either at all or at the level that they need for a particular component, or even if you have EJAA and you're just not quite sure about a particular tricky situation or something, you can reach out to the DCR engineering services staff for assistance. They have a form that you can find on the forms page in CAS, engineering assistance request form that you can um, submit for them to uh, get back to you and provide that assistance. One other note on engineering for practices that are being piggybacked with funding, federal funding from NRCS, the VAX program policy on that is that if more than 50% of the funding is coming from NRCS, that NRCS can take the lead on engineering. Although the DCR engineering staff will always continue to assist if needed or if requested. But VAX, the VAX policy is NRCS can take the lead in those situations. NRCS does not have the corresponding policy, which is totally fine. We've done that for kind of a workload management reasons, but you need to be aware on those projects. If NRCS is taking the lead on engineering, someone with the appropriate level of DCR, EJAA, still needs to review the I&E for that project to verify that it meets VAX guidelines and specifications before the district board goes forward with approval of that project. Okay, so we are at this point going to shift gears and start our very brief review of some of our key VAX practices. There are around 70 at this point, I think, practices in the VAX program. We are not going to talk about them all, and we are not even going to talk about the ones in this presentation in great detail. So please refer to the practice specifications in the manual for full details and requirements of all of these practices. You'll find within each specification the description and purpose, which is typically a brief paragraph that gives you a general description of what is this practice intended to do, where is it meant to be applied. That can be kind of your first step in, is this the appropriate practice for the situation I'm dealing with. You'll also find within the spec details of what components are eligible, what circumstances they are eligible in, if there are restrictions about applicability or whether certain components are eligible in certain cases. All of that is spelled out in the practice spec. You also will find the list of applicable NRCS standards for the components that are eligible under that practice. And the way that those are listed in our VAX specifications is it's just the numerical code and the name of the practice. So it'll, just says 382 fence. To see the complete NRCS standard and all the supporting documents, that's on the NRCS Field Office Technical Guide for Virginia. And we do have a link to that in CAS on the forms page. You can also just Google it and find it that way. But you do need to to go beyond just looking at the VAX specification and actually look at the NRCS standard so that you know what the expectation is, and you can provide that to your participants for all of those listed components. So we're going to start with stream exclusion practices. And the first ones we'll talk about are our SL6N and SL6W. This is stream exclusion with grazing land management. These practices require stream exclusion, fencing, and an off-stream watering facility as required components of the practice. A grazing management plan is required if more than 3 grazing units are created by the installation of interior division fence. And eligibility for SL6 is limited to pasture land that borders a live stream, Chesapeake Bay Preservation Act resource protection area, or in cases of severe environmental degradation occurring in and around springs, seeps, ponds, wetlands, sinkholes, etc., other water features. When there are connected features, such as a gully, a wetland, those should be included in the buffer with the minimum setback distance met. The minimum setback is the distance that every point of the exclusion fence should be from the stream. So it is a minimum at every point. It's not an average. If there are isolated features in the field, such as a sky pond or runoff pond, those can be fenced as part of an SL6 practice, but they do not require the full buffer width, and they cannot be the thing that qualifies the practice for the SL6. That has to be one of those features mentioned on the first slide. If the participant owns both sides of the stream, they have to exclude livestock from both sides. And the SL6 practices are only applicable to the fields where exclusion is being done. If there are upland fields that are part of the system and they want to exclude, extend, maybe some division fence or extend a watering system into those upland fields, that can be done under the SL7 practice, which we'll talk about in a little bit. So we have several practices that have that N and W distinction, including the SL6, and that indicates a narrow buffer or a wide buffer. Narrow being a buffer less than 35 feet, and wide being a buffer 35 feet or more. For our reporting and crediting in the Bay model, buffer width is really key, and that 35-foot width is kind of the magic number in terms of truly being considered a buffer and providing the benefits of a buffer. And so that is why wider buffers have been incentivized with higher payments and some additional incentive payments. So this is the for the SL6W, so stream exclusion with a wide buffer. The options for the minimum fence setback, the lifespan, and the corresponding cost share rate and buffer payment caps. So you can see participants have some choice here as to what they want to commit to for a minimum fence setback as well as a lifespan, and those cost share and buffer payment cap incentives increase as their commitment increases in terms of setback and lifespan. So there's an example here of how that cost share and buffer payment be calculated. I'm not going to walk through it, but it is there for reference. And in comparison, the SL6N also has options for the participant for minimum fence setback and lifespan. But as you can see, the cost share rates are lower and there is no buffer payment associated with those smaller buffers, narrower buffers. Um, again, just an example for reference. And I have some pictures here um, for examples. You can see the photo on the right-hand side. So we're looking towards the buffer, and you can see in there there's some tree tubes, those light-colored plastic um, vertical tubes. Um, Stream exclusion practices that are at least that 35-foot setback for the buffer can be combined with a buffer tree planting practice, which we'll talk about in a little bit. And so that's what you can see here, the tree tubes from where those trees have been planted. And then kind of on that hill beyond the buffer, you can see the little yellow trough in that field. And some examples of properly installed troughs. Um, so another option for exclusion for situations where an alternative watering system may not be workable. So maybe there's no way to get power to the site. It's maybe a really remote location or something like that. We have the W2, WP2, and W, and these are options for fencing out livestock from the stream without installing an alternative watering system. So this will provide either stream crossings or limited access points for water. Like the SL6, grazing in the buffers, excuse me, is not allowed, or making hay. The participant has to exclude both sides if they own both sides. And the WP2 includes a 5-year lifespan option. So this is how that breaks down for the 2W. So that's wide buffer width, minimum 35 feet, a 10-year or 5-year lifespan, and then buffer payment. The 2N offers a 10-foot or a 25-foot minimum setback, and then the 10-year or 5-year lifespan options. And so this is what we would see for to provide water, and there's the WP2N at a stream crossing or limited access. We have an option for a portable fencing system. This is intended to be temporary system designed with renters in mind, so that they are not taking on a commitment for permanent infrastructure with a long lifespan. This is a 5-year lifespan for a portable fencing system. Because it is a temporary practice, there's no provision of water through the cost share program. It just pays per foot of fence and to supply chargers for the fence. I mentioned earlier the SL7 can be used where there is either previous exclusion or livestock are being concurrently excluded from surface waters. And this can be used in addition to the stream exclusion practice to bring that interior division fence and watering facilities to distribute grazing in fields that are not receiving exclusion when those are being installed concurrently. A grazing management plan is required for an SL7 for all acres in the grazing system, but as of this year, the requirement to meet for that grazing plan to meet the NRCS 528 standard has been removed. It just needs to be a written grazing management plan, does not have to meet 528. The SL7 can be combined with prep practices. That's actually how it originated. It has 10 or 15-year lifespan options, and then different cost share rates depending on the lifespan and the buffer width that has been established. Our CCI practices, CCI stands for Continuing Conservation Initiative. So these are practices that let us keep track of either voluntarily installed or out of lifespan cost shared practices, while also offering some help to the farmer for the continued maintenance of that practice. So we have 5 options now for CCI for stream fencing. We've talked about the SL6 NNW, the WP2 NNW. There's a corresponding CCI option for those, as well as an option for a top of bank fencing. So for CCI, there is no minimum fencing standard or other standards required. The practice components just have to be working and effective in the judgment of the conservation planner. The practices being signed up for CCI cannot be in lifespan or under contract from any other conservation program. We do allow CCI on CREP renewals, and we have some new guidance this year on eligibility for practices that were installed either through other programs, other funding programs, or with BACs in partnership with another program. And I'm not including that here just for the sake of time, but you can find that in the CCI practice specifications. And if you have questions on that, please let me know. The CCI practices are paid out after the district staff has visited the site, confirmed that all the components are functioning as intended. The participant gets the full payment. These are flat rate payments. They get the full payment for all of their applicable components, whether or not they actually need maintenance at the time or not. We go ahead and make that payment with the assumption that at some point maintenance is going to be needed. The CCI practices have a 5-year lifespan, and they are eligible for re-enrollment. So there's an example here that I'm going to skip, but it is there for reference. And talk about our most common forestry practices. So the practice codes, FR1 and FR3 are our BACs tree planting practices. A couple general notes that apply to both of those. BACs does not cover replanting of timber harvest areas. Department of Forestry does have a program for that, so you can refer those folks to DOF. And our practices are not authorized for Christmas tree production. We rely on our partners at DOF for technical expertise on forestry practices. So the local forester will develop a plan for the tree planting species density for these practices. We require that the plantings be protected from grazing. And we do have some allowance for cost share to address a practice failure with replanting, provided that the failure was due to circumstances outside the participant's control. But the district needs to be notified within 6 months of the failure for us to take action on that. So in a little more detail, the FR1, afforestation of crop, hay, and pasture land. This is a land use change looking at a whole field or substantial part of a field conversion. The land must have been in crop, hay, or pasture land production for 2 out of the past 5 years to be eligible. And that receives a percentage-based cost share payment plus a flat rate per acre incentive. The FR3, this is the one that would have been done in the picture of the buffer we saw earlier. This is for planting hardwoods and or conifers in a minimum 35-foot setback from the edge of a stream that can go up to the width of the entire floodplain to a cap of 100 feet. And as I mentioned, buffers are great bang for the buck for water quality. So we incentivize them heavily. Um, the FR3 has a 95% cost share rate plus a flat rate per acre incentive and receives the buffer incentive payment, just like we include with the SL6 and WP2 stream exclusion practices. Now, when you have a situation where somebody is doing a stream exclusion practice and planting the buffer that's created by the stream exclusion practice, they only receive the buffer incentive payment once. Um, we don't double that up um, for the two practices. Okay. So moving on to talk about some of our nutrient management practices. Start with nutrient management plans. Many of our BACS practices require that the participant is implementing a nutrient management plan, and they are required for tax credit as well, as we discussed. So we try to make it very easy and accessible for folks to have a plan written. DCR has nutrient management specialists and staff who can write a plan at no charge for a landowner. They can also go to a private planner who is certified to write nutrient management plans. Those private planners, of course, will charge for actually their services, excuse me. And funding is available either through BACS under the NM1A practice, or DCR has a direct pay program with some of those private planners to help cover the cost if a landowner wants to go that route for their nutrient management plan. So we're going to talk about three of our nitrogen management practices. First up is the NM3C. This is side dress application of nitrogen on corn, grain sorghum, and or cotton. This practice wins the prize for most name changes as we keep adding crops that it can be applied to. This is just a simple side dress only. We have practices that we'll talk about for split applications, but the goal is to apply nitrogen when the plant is entering its stage of highest demand, so to result in less runoff or leaching of excess nitrogen. NM3C is applicable for either organic or inorganic nitrogen applications. It is only available to the number of acres that are specified in the participant's nutrient management plan to be side dressed. So it's important that participants work with their nutrient management planner on what practices they intend to implement, so those can be accurately reflected in their plan. I'm not gonna read all of this again. I'm trying to kind of hit the highlights in this presentation, but refer to the practice specifications for the full details. The NM3C is an annual practice, so participants can sign up year after year. There is an April 1st sign up deadline, although if a district wants to establish an earlier deadline, they can do that. And the payment is $6 per acre for the side dress application. We also make that payment if for acres receiving a 0 application based on a nutrient management, PSNT, pre-side dress nitrate test. If that test results showed no nitrogen needed and the the farmer applies no nitrogen, we will pay that $6 an acre, and we reimburse them $12 per sample for PS&T samples. The NM4 late winter split application of nitrogen on small grains. So this is a practice for applying nitrogen in the late winter in 2 increments, again, based on the growth of the crop to try and minimize any loss of nitrogen. There should be a test to determine rates if there has previously been organic sources of nitrogen applied. And there are some limitations and guidelines in the practice spec for rates and timing of those first and second split applications. The NM4 is also an annual practice, but does not require carryover because the complete practice happens within one program year. It has a February 1st sign-up deadline, and again offers a $6 per acre payment only for the acres that actually receive the 2 split applications. If only one application is made, then the requirement of the practice has not been met and won't be paid. Anyone who is doing the NM4 is not eligible to do the SLH, the harvestable cover crop practice, on the same acres. And the NM5N, this is our more enhanced nutrient management for nitrogen practice. So there are multiple technologies or techniques under the NM5N that are applicable to row crops, specialty crops, small grains, and highly managed hayland. So this practice requires applications based on test results, which are used to develop a prescription for the nitrogen application. That prescription has to be followed. And some of the options that are available under the NM5N include variable rate or zone application, 3 or more split applications on small grains, 2 or more applications on highly managed hayland, and injection at side dress. So depending on what exactly your participant is interested in doing is going to determine which of these practices is applicable to them. So as it says on the slide, just make sure you read through the specs, follow the guidelines, and are choosing the appropriate practice for the situation. NM5N is very similar to the NM3C. It is also an annual practice. The timing of those two as to when the nitrogen applications need to happen means that although they are completed within a single crop season, they do need to have the ability to be carried over because of our program year transition happening July 1. And the NM5N offers an $8 per acre cost share rate. Again, very similar payment structure to the NM3C. So we have one nutrient management practice for phosphorus that we'll talk about. It's set up very similar to the NM5N, but it is the NM5P for phosphorus. Similarly to the 5N, this practice is supporting multiple enhanced nutrient management technologies for row crops, for specialty crops, small grains, and highly managed hayland. This practice uses zone or grid fertility samples to develop a phosphorus prescription for the field participant that has to follow that prescription with their application. It is an annual practice eligible for carryover due to the timing of the practice with our program year turnover, and has an April 1st sign up deadline. Um, $8 per acre cost share rate, including acres that receive a zero application based on the test results. But we do not have a reimbursement for the zone or grid fertility tests that are done under the 5P. All right, talking about some of our cover crop options. I'm going to go through these. We have more cover crop options than these. I'm trying to stick to the most common ones. But some of the things that these all have in common, their general purpose is to establish vegetative cover on cropland to reduce erosion and loss of nutrients. These are annual practices, so they can be signed up every year on the same acres. Participants can choose to receive cost share or tax credit. They can't get both on cover crops. Our specifications prescribe seeding types, rates, planting dates. There's a lot of detail in the spec to pay attention to. They require a nutrient management plan. No nitrogen or phosphorus is allowed to be applied at planting. And the district does have to do multiple field checks for these practices, checking that they have established the required cover and then checking at the end of the season that however the cover crop that was supposed to be terminated and left on the field, that's been done um, to be able to technically certify the practice. So first up, we're going to cover the WQ4. This is our legume-based cover crop. We do consider it a cover crop practice, but it is more focused on building nitrogen to be able in the soil to be able to reduce future nitrogen applications. So this is just a $45 per acre flat rate payment or tax credit, and does not allow any grazing or removal of the cover crop residue. The SL8H I mentioned, that's the harvestable cover crop option. It requires 60% cover to be maintained through March 14th. Harvesting is allowed after that point. We do allow manure to be applied on up to 300 acres of the 8H, but there are certain conditions that have to be met in order for that to be allowed. And we have two payment options for the SL8H, depending on whether it is harvested for seed or grain as well as straw, or if the straw is left on the field. All right. The SL8 protective cover for specialty crops. This is for vegetables, tobacco, ornamentals, small grains, other kind of specialty, or I guess say non-standard crops that we typically see, corn or soybeans. The seeding for this practice has to be planted and certified by November 30th, and then has to remain in the ground for 90 days after that certification. The residue can be incorporated or left unincorporated on the field, but it cannot be removed from the field. And that just receives a single flat rate per acre payment. Okay, the SL8A is called Protective Cover for Agricultural Cropland, and this is intended to be sort of a catch-all cover crop option, incentivizing producers to keep cover on their cropland when it's not in use. So it's geared towards a situation like following a crop failure, if there's been some sort of natural disaster that has damaged or wiped out the intended crop, some other unforeseen circumstances. It also covers summer cover crops. You need to refer to the list of species or lists of species in the spec because there are different species depending on the season that is being planted. 60% cover has to be maintained for at least 60 days or until the conservation purpose is served, whichever is greater. And again, cover can be incorporated or not, but has to be left on the field. And the payment rate for the SL8A is variable depending on how long the crop is left on the ground after achieving that 60% cover. Okay, SL8B is our say gold standard, the go-to cover crop option. It receives the highest amount of credit in the Chesapeake Bay model. And this is a fall winter cover crop with the intention of establishing vegetative cover on cropland to reduce erosion and nutrient loss and to take up residual nitrogen from previous applications. So no nitrogen or phosphorus is allowed to be applied between the harvest of the previous crop and March 1st of the following year. We list in the practice spec the seeding options. There is a note there that if using aerial seeding or other non-incorporation seeding methods, that higher seeding rates are recommended. Certain varieties of rye are eligible for an additional bonus payment under the SL8B. And the practice spec lists both an early planting date and a standard planting date. Those are incentivized differently in terms of payment rates. And depending on the area of the state, your planting dates are gonna vary. So 60% cover has to be established by December 15th. The district has to check that and verify that it has been established, and then has to be maintained through March 14th. We do allow grazing of the cover crop if the participant is set up to do that, as long as they keep that 60% cover even with the grazing. Harvesting under the SL8B is not permitted for any reason, any situation. If the participant wants to be able to harvest their cover crop and still receive a payment, they should apply or sign up for the SL8H instead. For the SL8B, the crop has to be terminated either by grazing or mechanical or chemical means no earlier than March 15th and no later than June 1st. And again, it can be incorporated or just left unincorporated on the field. The SL8B payment options are flat rate per acre payments, but there is a tiered system with some stacking available depending on the options that the participant selects to do. So the actual total payment rate per acre can vary among fields. And then finally, for our cover crops, we have the SL8M. This is essentially the same as the SL8B, but with it allows the application of manure over the winter between harvest of the previous crop and March 1st timeline, if certain conditions are met. Still no harvesting is permitted, and it has a similar tiered payment structure, but at lower rates than the SL8B because you're getting that manure application, and that reduces the credit that we get for water quality benefits. All right, I'm going to talk about a few other key VAX practices. Um, the SL1, long-term vegetative cover on cropland. This is a land use change conversion practice that establishes grass and or legume vegetation on cropland that currently has existing cover of less than 60%. So that requires a 3-year minimum cropping history. The participant selects a 5, 10, or 15-year lifespan option, and um, it has a combination payment rate with a 75% um, payment on eligible components, and then a per acre incentive payment that varies depending on the selected lifespan. And because this is a land use change practice, is intended as a land use change, um, cost share or tax credit is only provided one time per field while that field is under the same ownership. The SL11 practice, permanent vegetative cover on critical areas. This is a practice to stabilize critically eroding areas and reduce sediment and nutrients from the site. It includes grading, shaping, filling, establishing grass and or trees. It is not for use in areas where water is concentrated and flowing. For those situations, we have the WP3 sod waterway, similar purpose, but to address areas where there is concentrated flow. So for comparison, these two sites kind of illustrate the difference of where you would apply a WP3 for concentrated flow versus an SL11. All right, we're going to quickly go over our more common animal waste practices under the WP4 suite. I think I have, what I have, 6. We do have a couple of additional ones that just aren't as commonly used, and so I didn't include them in this presentation. But starting with the WP4 practice, animal waste control facilities. That is a waste storage practice only. That could be for liquid or solid animal waste. Typically, that's going to be either a liquid dairy manure pit, or some sort of uh, dry stack or poultry litter storage. We have WP4C for composter facilities. This is to handle mortality, provide composting space for poultry, small ruminant, and swine operations. The WP4LC, animal waste control facility for confined livestock operations. This is used for facilities that need 100% confinement of the livestock, and it requires permanent removal of livestock from all acres associated with those livestock that are being confined. And I mentioned earlier how there are differences sometimes when we're piggybacking or working with partners on the same practice, particularly often with NRCS, and the different programs have different rules or different things that they can address. This is one that is a very kind of clear-cut example of that, where VAX has this rule that the livestock have to be permanently removed from those acres when we are providing cost share on a WP4LC. And NRCS does not have that same rule in their program. So if you are working, in partnership, piggybacking with NRCS on one of these practices, that's the kind of thing that needs to be coordinated and make sure the participant understands what's going to be expected of them, and that the practice that's being planned is something that is going to be eligible for both programs to be able to fund. The WP4B dairy loafing lot management system. This creates a system with either a sacrifice lot or a covered facility with manure storage, and then a minimum of 3 grassed lots for the cows to loaf in, specifically for dairies. And then we have the WP4LL, which is a very similar practice, loafing lot management system with manure management for any other type of livestock, excluding bovine dairy. So similar setup. It's just the sizing and some of the management considerations for dairies are different from other types of livestock. The WP4SF seasonal feeding facility with attached manure storage. This is providing a roofed area to feed, not for any confinement, but for feeding, and then an area to store the manure that is collected in that feeding area. And we have a couple of CCI options for animal waste practices as well. We have a CCI WP4, which is kind of an umbrella practice for our animal waste options, as well as the CCI WP4C for composter facilities. And again, those CCI practices are for voluntary or out of lifespan practices that the participant is continuing to maintain, and we can provide some funding to them to go towards maintenance, and we get to continue tracking and crediting those practices. For all of our animal waste practices, that whole WP4 kind of suite of practices, we have to always be working within that least cost technically feasible guideline. And this particularly comes up when we're trying to address a resource concern from a feeding area. And depending on what other options may be available on the farm as far as location, sometimes the least cost technically feasible way to address the water quality issue is to relocate the feeding area. We plan and design these practices for the number of livestock that are present on site at the time we're planning the practice. We do have a new process established this program year as the result of a state budget amendment, where we have developed a process to plan waste storage facilities for operations that are still in the planning process or under construction. So the animals are not on site yet. If you run into a situation, one of those situations, you can refer to the practice specifications for some guidance, but also please feel free to reach out to me or to Amanda Pennington for help navigating that. And all of our practices within the WP4 animal waste suite have a 15-year lifespan and a 75% cost rate. So I have a few slides just with photos of what the types of practices that are implemented under these WP4 suite of practices. So this is an example of a before and after of a bedded pack facility for beef cattle. We have a litter shed and composter. So you can see in that picture on the left, the litter piled outside. So in the after photo, it's under roof. And then the composter in this picture is a drum composter, which typically we will plan and size for a bin composting system. But if the producer wants to install a drum composter, they can do that under our specs. A dairy liquid manure lagoon.
And they would say,
Oh. Um, Practice from a dairy, providing that facility for the animals to be um, housed in part of the time, which may look something like this. This is a different project than was in the previous photo. Um, but just some examples of what those practices look like. All right, I'm gonna just quickly touch on the CREP program, which is Conservation Reserve Enhancement Program. Um, this is a partnership program with multiple agencies, both federal and state. The Farm Service Agency, or FSA, is the lead for the CREP program. So they determine eligibility um, and create the contract on the federal side for the participant. NRCS has some involvement, Department of Forestry has some involvement, and districts have involvement as well because there is a federal payment under CREP and there's also a state payment. And so the districts have a role with taking the sign up from the participant. Um, they get the information from FSA and use that to um, enter the practice information in CAS. CREP funds are managed at the state level rather than individual districts receiving an allocation. So in order to request those funds, there is a status in CAS of funds pending um, confirmation. So the district can enter the CREP contract information, use that pending status in CAS. That will notify me that there is a request waiting, and then I can confirm that funding out of the state pot of CREP funds for the district to then approve, the district board to approve. So I don't want to get into that a whole lot because there are quite a few districts that really don't have any CREP participation. But if your district does and you need help figuring that out, please just let me know. Um, and with that, we made it. Um, so if anyone has questions, you can continue to go ahead and put those in the chat. Um, we'll stay on until noon or for as long as we need to answer questions. Appreciate everybody joining us today. And I know we're recording this session. We will get the recording and I don't know if we'll send it out or if we'll just post it, but we'll let folks know where to find that recording. I also will send my slides, probably give those to Carl so he can send those out. Okay, I saw a question about, is there recertification credits available? I should probably let Carl answer that, but
Yeah, there are no recertification credits for today.
this is part of the initial conservation planner certification. Um, so I know a lot of folks would like to join just to kind of stay updated and hear it again too. All right. Well, if you all find that you have questions, later, after you're thinking about things that you heard today, go ahead and send an email. All right. I don't see any questions coming in, so